Good morning, traders. This is Chris Buss with your morning look at the markets for Wednesday, August 5th. I want to spend a little bit of extra time on the index charts this morning. I think there were some significant technical developments yesterday that I was looking for. Here we have the SPY 2-hour chart. And this level here, although I don't have it called out, was is 329.50. And you can see that we spent quite a bit of time under that level. And on the shorter time frames, the 30-minute chart, which we'll look at in a minute, and the even shorter time frames, 15 and 5-minute charts that I watch intraday, it was really, price was really struggling to get through that level. And we have the gap below, along with this uptrending line here. Now, it looks easy in hindsight to say, yeah, you should have seen it. It was going to break out. But I wanted price to prove it. I didn't want to go out. I got a number of buy alarms yesterday, but chose to not ignore them, but shelve them for the time being until I saw this breakout. The last thing I wanted to do was, pile in right before or below a breakout where, one bar, if this bar would have been red and closed below this trend line and filled the gap yesterday afternoon, everyone would be thinking, oh man, you just loaded up at the top. And I don't want to do that. I want to load up on a breakout and then have a clear level to shoot against. And we have that now. We have 329.50. As the most recent breakout, we've got a target of 332, and as long as we stay above, trend and above 329.50, we should be in good shape. Now let's look at the 30-minute chart. And to me, this looks like a massive bull flag. We had an impulsive move. We were testing this 321 area. We made a big, impulsive move the other day. We had the gap opening, and then we had a ton of consolidation in a flat flag type pattern. And now we got the breakout. So to me, this looks like a really big bullish bull flag with an emerging breakout. I did the measured move on the structure, and it's 338, which would take us to fresh all-time highs. So to me, the stars are aligning, or they continue to align with bullish price action. Now, again, we have this 329.50 to shoot against. And so that's a new reference level for you to mark on your charts. There's no reason for price to come back into the range. So for this breakout to remain valid, price needs to hold 329.50. No doubt about it. Not ambiguous at all. If, price pops up here and then they come back and back test it, come up and then come back down, that's fine. That happens all the time. And if you weren't in, that would be a great place to either add to a long position that you got over here, or for people that say, oh, I missed the move. If price comes back to 329.50 and holds there, that's a good second second entry location. So look for that. So the key takeaways here is big bull flag structure. We got the breakout. No reason to come back in to the prior trading range. Measured move target is 338 to fresh all-time highs. Again, that's not a prediction. That's a projection. Anything can happen up here along the way. We've got another initial jobless claims tomorrow. We've got the July jobs number on Friday, and those are two huge, macro data points. If price doesn't like what it sees and the market, turns around, we'll adjust to it. But for now, I like what I see. I like being long. Bears need to cool their jets. This was the last chance to reject this high and push it back down. They couldn't do it. So bulls are definitely in charge of the tape. Let's look at the cues. It doesn't look like much here, but price broke above this congestion area. Again, this looks like a big bull flag to me. I don't have it boxed in. Oh, maybe I can do that right here. Let me see if I can do this. No, I'm going to leave it. I'll fill that in, box this in here with this bull flag structure. Again, like SPY, we've got a new reference point, and that reference point is 270. Mark that on your charts. No reason for price to come back below 270 unless the breakout was fake. Okay? And if price does come back to 270 and holds, again, that's a second entry location. That back test happens all the time. We're in blue sky territory here. In the history of the NASDAQ or the Qs, anybody who bought is profitable. People that bought yesterday or people that bought 5 years ago, they're all profitable. So there's no natural sellers. What it'll take for new selling to come in is, new information on earnings, new information on these macro numbers, something negative about the COVID package. So there's plenty to worry about, but the price says it wants to go higher, and we have to trust that right now and set whatever worries or concerns we have to the side. As we've been saying in the notes, we'll know a bearish move when we see it. So there's no reason to sit on the sidelines scared. There is a reason to not, go gonzo, leveraged 3,000%. We're in, nosebleed territory. It's all controlled by 5 stocks, and we know which ones they are. And if everybody decides to take profits on those 5 names, the Qs are coming back, no question about it. But until that happens, we got to stay bullish. Here's the 30-minute chart. You can see it clearly here. We really wrestled with that, 270 level. We held the trend line. We got the breakout. We got to stay bullish. Here on the PPO, we got the bearish cross, but we never got the price move. So momentum backed off in time, not in price. And we can see here that the RSI never broke below 50, turned around. That's bullish. You can see momentum starting to curl up. The futures are boldly green at this point, so we're going to get a gap up this morning. Lean on your gap rules for trading that. If it drops down, if you're an active trader, you can, try for a gap backfill. That wouldn't surprise me a bit. Bringing price back into this 270.50 area. So from the 30-minute time frame, it looks really bullish to me. Mark that 270 on your chart. Any move back below 270, in my mind, is a sell because, as we've talked about forever, any moves back into a trading range after a breakout makes that breakout look fake. So that's our line, 270. Nice move in IWM yesterday. We had been saying all along that we had this trading range, this $5 trading range between 145 and 150. We had said yesterday to try a fade against 150 because it had failed there before. Didn't work. Okay, so you got stopped out. That's still an objective trade. In my mind, you followed the process, you followed the odds. It didn't work. You quickly got out and lost a little bit. But now we're in bullish mode. We broke out of a well-defined trading range. We're above that resistance level, which now becomes support. And we've got a gap above. The measured move target coming out of this $5 range is $5. So our new target is 155. Same trading principles apply here as any other chart. As long as this holds 150, it's bullish. You can be long against it. If it comes back this morning or any days in the near future to back test this 150, you need to assume it's going to hold. You need it to hold if you're long. Any move back below 150 is bearish and is a short. But as long as it holds 150, it's bullish. And that can be a second entry for a long try right there if the rest of the market, is obviously cooperating. So mark 150 on your chart. 155 is a target. We'll have a gap open this morning, plus this prior gap here from 151 to 152 and a half. Here's the 30-minute chart. We've had this long-standing uptrend line. Price is now above it and above 150. I think you'll see, this fill today. Any move back in this area will fill it. We've got, an opening gap, not to worry about, but to consider possibly trading it. A gap fill this morning, if you were not long, overnight, would be a good place to try an entry because things look bullish here. I would be really surprised if they pop it way up here and then come all the way back. You need to be ready for that, but I don't expect it. Just respect it and know the rules that we just talked about. Anything above 150 is bullish. Anything below 150 is bearish. So that's the way I see it this morning. I don't have the charts handy, but I do want to mention a couple things. Pizza, Papa John's reports tomorrow morning. We have a $10 win on it, at least. I saw that it was up yesterday. I exited that trade. I booked it. I really hope that you at least book the vast majority of it into earnings tomorrow before the bell, and don't risk that win by keeping it on the table. What was the other one? Yeti. Booked that win yesterday. $6 win. We were long against 45, and I think I booked it at 51. Intel, we had a short on that on the range break trade. It was looking good and has since reversed. It's up near a stop. If it takes us out, it takes us out. You should have had a stop. We moved that stop to break even. It would be disappointing if that, comes back and clips us. But if the market's strong, Intel's probably going to go up. So just, if you're in it and it comes back to your stop, just take it off, and accept the small loss or break even. That's the way it goes. Netflix made a move into its upper gap yesterday and held it. You can be long against 405, and the upper price target on Netflix is 430. That would fill the $25 overhead gap. We got a nice pop yesterday in Costco. I think it was up $8, something like that. So that one finally popped for us. Those are the ones on top of my head at the moment. Now that we've got some new bullish information, I will be reviewing our trades on places where we can objectively move stops up and looking for new bullish entries for going forward. I want to still lean bullish, not crazy bullish, but bullish. I want to participate in this. I want to be bullish on short-term index trades where we can stay really nimble and participate and get out quickly if things turn around. Lastly, I want to mention Spirit Airlines. I think I had told you that I got a short trigger and got short. Yesterday, I was stopped out on that because there was earnings the evening after I got short. So basically, I lost track of earnings. I failed to look at that before I entered the trade, and that was a fatal mistake. A breakdown in my process. I can't give you a reason why I didn't look at that, but I didn't. So that's a process failure. That's a bad trade. I can accept getting stopped out like on an Intel. I mean, it happens. That's trading. Disappointing, but it happens. There's no excuse for not knowing when earnings are for stocks that you either hold or getting into. So that's an embarrassing mistake. Please make sure in your process setup that checking earnings is something that you always do. Otherwise, you'll be prone to that mistake repeating itself. So I wanted to share that with you. So that's about all I have. Please look in the show notes for links to subscribing to the YouTube channel. There's a link there to the blog where you'll find a lot of interesting and helpful information to your trading, and also a place to register at Profit Compass, tradersprofitcompass.com, where you'll get all my content delivered directly to your inbox each day. Please hit the subscribe link and the thumbs up on the YouTube video if you thought it was helpful. And if you didn't think it was helpful, keep your big mouth shut and let me gain some momentum here. Thank you very much. This is Chris Buss with Traders Profit Compass. Have a good day of trading. Talk to you next time.